So, Greenland. Are we really talking about buying Greenland again in 2026?
It sounds like a joke, I know.
I saw the headline on this report that's dropping tomorrow, the Greenland Singularity, and I honestly thought it was a spoof. But it claims this is the single biggest economic theme for the year.
And, it's not as crazy as it sounds. The report makes it pretty clear this isn't about real estate. It's about controlling the periodic table.
The periodic table. So we're talking about resources.
We're talking about a hostile takeover of the entire supply chain for everything that matters now. AI, defense tech. The report calls it a shift to transactional sovereignty.
Transactional sovereignty. I mean, that sounds clinical and a little terrifying. Walk me through it. Why Greenland?
Rare earth elements. REHs, all the minerals you absolutely need to build the next generation of AI hardware. The strategist behind this report, he introduces this concept called TUCO.
TUCO. That sounds like a brand of taco seasoning. What is that?
It stands for Threat of Conflict Outcome. Think of it as a high-stakes game theory. The idea is Trump knows he can't just buy the island. It's not for sale.
Right. Denmark already said no. Pretty loudly.
Exactly. So TOCO is the backup plan. You don't use a carrot, you use a massive stick. He threatens, say, 10, maybe 25% tariffs on key EU exports, German cars, Danish pharma.
So he holds their economies hostage.
He holds them hostage for a special economic and security zone, basically a 99-year lease on the mines.
And that matters because of what's happening in AI.
It's all connected. The report gives a pretty stark timeline for 2026, the first half. It's a boom. Hyperscalers are spending like crazy. CapEx is through the roof.
Okay, so if you're holding tech stocks, you're feeling good through, what, June?
Until June, yes. But then we hit what the report calls a resource wall.
A resource wall?
Yeah, and it brings in this amazing concept from Gunther Dube, swarm stupidity.
Yeah, swarm stupidity. I love that. I feel like I see that in meetings every single day.
Yeah.
How does it apply here?
Well, it's not that the individual players are stupid. It's the herd. You have every tech giant rushing to build these enormous GPU clusters all at once. The swarm. But no one's checking if there's actually enough power, enough infrastructure, or enough raw materials to run them all.
I see. So the Greenland dispute, it's the trigger.
It's a potential trigger. A huge one. If that tariff war kicks off and those minerals get locked up, the price of hardware goes vertical. And the whole AI growth narrative it could break.
Okay, that is a scary thought. If that bubble pops, what does that do to the rest of the market? Where does the smart money even go if the tech giants are stumbling?
Things get very tricky. In the U.S., the report speculates about Rick Ryder becoming the next Fed chair, a so-called trader's Fed.
A trader's Fed. What does that mean in practice?
It means a Fed that's willing to accept higher inflation, maybe around 3%. They do it to help manage the national debt, but it has huge consequences.
For bonds, I'm guessing.
Oh, it's brutal for bonds. The report forecasts a bear steepening.
Okay, bear steepening. Break that down for us. What does that mean if I own bonds in my 401k?
It means if inflation is expected to be higher, new bonds have to offer a higher interest rate to attract buyers. And if new bonds are paying more, the old bonds you're holding, the ones with lower rates, they become way less valuable. Their price just crashes.
Got it. So bonds are out. What about overseas? Europe can't be doing well if it's in a trade war with the U.S.
It's a mess. Stagflation is the word for the EU and UK. Low growth, high prices. And yeah, that tariff fight could easily push the euro below parity with the dollar.
And Asia, China.
China's pivoting hard, trying to sell to the global south. But the report flags Hong Kong as a dark horse. It's been beaten down so badly that it might be one of the few places left to find real value in the second half of the year.
So let's pull this all together. We've got a resource war, a potential AI correction coming this summer, and inflation that's going to hammer the bond market. What's the big move for a listener trying to make sense of all this?
The report is pretty blunt about it. Get out of paper assets. Move away from fiat-heavy portfolios, so less cash, fewer bonds, and get into hard assets.
Hard assets. Like what?
Gold, commodities, Bitcoin, things you can't just print more of. In this new world of transactional sovereignty, you want to own things that are real.
Right. It's a return to physical reality. If data is the new oil, you're saying you better own the mines that make the drills.
That's the core of it, yes.
A lot to think about there. It seems like 2026 isn't going to be about who has the cleverest algorithm. It's about who controls the actual dirt. Thanks for breaking this down for us.
My pleasure.